All right. Good morning, everybody. A little bit of a pullback after the extraordinary move that we had yesterday. Small caps down the most at 1%. NASDAQ down more than a half. And the Dow down the least at more than 0.25%. This trade deficit today at 8:30 is going to be the biggest one. I mean, the Fed can always screw up, put their foot in their mouth, say something they didn't mean, or the market, the reporters can take what they say and twist it around. But that's more of a mistake than anything else. So unless they deliberately want to go out and throw cocktails, I don't think they do. This shouldn't be too big of a deal. It's going to be that trade deficit today. And tonight, Japan's 10-year bond is going to be a big deal. So they kind of lay it out here. Inflation report on Thursday and the start of earnings on Friday, keeping a lot of money on the sideline while they try to get that figured out. CTAs, vol control funds, those guys don't really have discretion. They have to trade when their criteria is met. But a lot of funds and firms are going to wait to get this data. Globex low this morning is the halfback of the 3-day open range. So I've been kind of talking about these daily open ranges. There's a 1-day and a 3-day open range. And if you mark the 3-day open range from the high to the low, the start of the month, first 3 days, mark that 50%. That's what our Globex hit this morning. Not too bad. We do have some additional auctions today too, 11 o'clock and 1 o'clock. Neither one of these are really big. I know we're not supposed to have favorites or, kind of lean towards one or the other. I'm not going to say that these don't count, just that they have less impact than some of the other auctions that we're going to see. And just keep your eye on the clock. Here's your SPX levels for today, if you want to capture a screenshot. Or the SPY. And the Qs. All right, so volume's sitting pretty normal around 100. Nothing stands out there. We don't have a market maker move. So we can see that they're not hedging this morning, and we are above the weekly pivot point, which puts us in a bullish bias. Aside from that, we also have the other pivot point, the daily and the daily channel. When we open above the daily channel, we start with a bullish bias. This is that channel. It's a little bit of a math formula, but really the daily pivot is a math formula. So it's not really, like we're introducing something different. We do have the 10-day moving average right underneath us. We managed to get through that level yesterday. You can see how we broke through the weekly pivot point yesterday and then managed to Busby off of it on a pullback. Really nice. And we made it through the 20-day and the 10-day yesterday. There's another halfback level that you can mark today. It's from yesterday's high, yesterday's low. It lines up on one of my pivot points, so I didn't have it marked here, but 47.59 is the halfback from yesterday. $47.90 is the halfback of the current pullback. $10-day, 30-minute volume profile. We're starting to build a B shape. If we continue this downside move, we could get back into that 47.50 area. And I think if we do, we'll bring this point of control down. Otherwise, if we continue this move to the upside, we're very likely going to keep that point of control up there. Just have to see how fast we can do it, because Wednesday is the start of all of that volume that gave us that point of control at the start of Wednesday afternoon into Thursday. So as the day wears on, or as the week wears on, I should say, we're going to lose these candles to the left, and we'll start getting up into this 48.30 area. It really shows how we topped out and the volume came in, right, with those sellers. It's such a massive amount of volume at that level. It's pretty cool. Of course, we did spend more time there, volume by time. Either way, we're in a really deep zone. 48.20 as the level to the upside of 47.50 to the downside. I think we could see a little bit of reversion. That was weird. Could see a little reversion back to the mean. All right, we got a new VPOC to the upside from yesterday. 47.99 and 2 ticks. Well, it's as close to 48 as we need it to be, but whatever, to the tick. 4,800 VPOC. So a move to the upside is going to feel that. It's going to have a hard time getting through that level. Also, 47.88 is an area from just today's profile where we're going to have a hard time getting back up through that zone, very likely. All right, so I mentioned yesterday we had a TRB setting up. A TRB owes us back to the high, 48.30 area, that center of gravity up there. And it's worth noting pure price. So with pure price, now that we've set this high and we've set a lower low than that low, what we do next really matters. If we fail to come up and get an equal high and instead come down and break this low, that's a trigger for a downside trade. So that's really what we're on watch here for. If you're looking for, like the bigger signal to S&P back to 4,600, 45.5, something like that, it has to break that 4,700 low. But it also has to break that low without having broke that high there. So it's kind of a really big deal. The fact that we broke this low is really important, but it's not enough yet by itself. All right, so pure price method, we would need to come down and break this low without having come up and hit this, which means we could get a complex top. We could still do that. But a TRB owes us back to these highs, nothing more than that. And the reason we like the TRB so much is because a lot of times this breakout candle makes the entire distance in one shot. This distance was just too great, so it wasn't able to make that, but that would be the idea behind it. All right, we did get to the edge of the weekly expected move and broke outside of it, but we're already back in again. One of my trade strategies using the weekly expected move is to short it if we break outside before Wednesday. So a Monday or Tuesday breakout is a short, unless, of course, we break to the downside, then it's a long. That's a trade strategy that works fairly well. I mean, nothing works 100% of the time, but if we get there that early in the week, then we very often are going to flip and go back the other side, just like with the average daily range, which we hit yesterday. And I had mentioned when we hit the ADR that early in the morning, that we can actually go and hit the other side because of how early we hit it. It gives us room to do that. Yesterday, we hit both sides of the ADR. We hit the lower edge, and then we ran up, hit the upper edge, and went all the way to the far side of the ADR. That's how far the S&P traveled yesterday. That's fantastic. Well, here we are again, really close to the ADR low, and the same thing applies today as it did yesterday. If we hit one of these ADR levels early enough, it opens the door for the other side. So same thing with the weekly expected move. We've hit the edge early in the week. That implies that we can actually hit the other edge before the week is done. It doesn't owe us that, by the way. Just here's another example. We hit the edge before Wednesday, came back in. We hit the edge on a Monday here and Tuesday, we came back in. Right, so it's not perfect, but it's a strategy that I've used for a long time now, and it works well. Even here on a second day of the week, Tuesday, hit the edge, it came back in. Almost hit the edge here, second day of the week, came back in. So we're 2.5% away from the 10-week. We've continued to expand away from that line again without coming down and hitting it. We're not overbought. We haven't gone too far on the weekly. And on the daily, we just got through that level, right? We got back above the 10, and now we're pulling back a little bit. So we're above it, but we're basically on it, right? 0.16. We're not even 0.25% away from the 10-week. We're there. So what we do next year really matters. And in the shortest duration, I really want to see us hold this 50% of yesterday. So I just marked out the halfback from the highest to the lowest point, rather than just using the RTH of yesterday. In the smallest duration, I really want to see us hold this. Otherwise, I think we can break this low and try testing that 4,600. And since this is a full pullback, you can measure that as well and get a 50% mark from that. I like the 3-day, the start of the open range. All right, this morning we got nat gas and some miners, gold miners, and that's really all we got to the upside. To the downside, we have basically everything else. Emerging markets through China or the K-Web seem to be down nearly the most. I know this triple leveraged semiconductor isn't exactly the best gauge when it comes to semis, but they are down considerably, trying to come back. These are names from the scan that are very close to their put support. Now it's looking at all of the options that these names have. It isn't picking a particular week. There's another scan where we can just look at the front week options and see where the call wall or the put wall is. But this is looking at all of the options that these names have. And Adobe is at its put support. Home Depot, Lulu, KRE. Just don't forget, banks are going to kick off earnings this week, so be a little cautious with KRE. And call resistance. The NASDAQ through the NDX is at that call resistance. It was 0.8. The Qs were 0.18% away yesterday, the last time I looked, and I think they kept going, so I think they hit it anyways. But the XLF, Kroger's, Expedia, and Inuit Software all near their call resistance. So again, two ways to trade this. You can see them break through their call resistance as a long play, or you can see them get rejected and then trade it as a short play. So the China ADRs are still in a beat down. I mean, this isn't looking, like it's turning around anytime soon. We're still near the lows. We do have a double bottom. Nice. A little deeper than the previous low, just the way it's supposed to. But we still got this other bottom back here, and we don't know if it's going to come into play yet. So there's a lot of reasons to kind of get bulled up on at least some of those China names. Individually, we can pick out a few. Wow, I just lost power. So I'm running a backup. I'm pretty sure you guys can still hear me and I still have internet, but all my other machines have to reboot. Well, that was fun. We have a lot of snow outside. We got hit pretty good. Hopefully, I don't lose power for good. So better wrap this up. KWeb's down, China ADRs, Baba, Baidu, JD, PDD. All the indexes are pulled back. Bitcoin through BITO. So we might want to check those miners, Hut, Hive, and then others that are connected. Mara, Riot, Coin, MSTR. Semiconductors, bonds. This is the bulk of what is down this morning, but really everything is, got some form of red basically, except pot stocks, a little bit of crude, nat gas, some energy stuff, XLE. Gold's trying to come around. Precious metals with silver. It's not there yet, but it's trying. Could be worth a look in that direction. Watch the clock. Everybody be careful, be safe, and we'll see you all.